Hi, it's Andrea with the Cash Flow CFO, and I'm so excited that you are here today. And we are going to talk about the 5 numbers that you need to know when you are reading your profit and loss statement. So let's go ahead and jump in. I don't know if everybody can see me. Let me just double check that, make sure we're live. All right, perfect. So let's go ahead and get started. So the very first number that you need to know when you are reading your profit and loss statement is your revenue, total revenue. So we recommend that our clients, we split out our revenue by the different revenue streams. So you can see how much revenue each individual stream is generating and also contributing to your total revenue. So a lot of times our clients come to us, and when we first start working with them, they have everything lumped into one bucket of profit. And so we recommend that, and the first thing that we have them do is split that out by revenue stream. And that's really important because it gives you clarity. And as we move through the numbers in our profit and loss statement, I'll show you why it's really important to have those split out. So the first number that you need to know is your total revenue. Okay, the second number that you need to know on your profit and loss statement and understand what it means and what goes into that category is your cost of goods sold. So if you are selling a product, you will have a cost of goods sold. If you are selling a service, then you will have a cost of revenue. Means the same thing. It is every expense that your business incurs that is directly related to delivering that product or service. So we have a lot of service-based businesses in our group. So for those clients or for those company business owners, I would say to categorize anything that it costs, mostly going to be direct labor, is a service-based business's number one expense. So your cost of revenue. If you have any specific softwares that you use in order to deliver that service, then that would be a cost of revenue. Additionally, any credit card processing fees or specific fees that you incur when you are delivering your service. If you are a product-based business, then your cost of goods sold would be any of the raw material costs that it went into producing that product, your shipping expenses, your direct labor, credit card processing fees. Those are going to be in your cost of goods sold. And it's really important that you also split these out by revenue stream, because what you want to do here is be able to match up how much income one revenue stream generated and how much it costs you to deliver that particular revenue stream. So that's really important, because what that will do is uncover if you're leaking money, and you might have a revenue stream that truly ends up costing you more than you thought to deliver it. And so therefore you might be making a lot in sales in that revenue stream, but when you look at how much it costs to deliver it, you might see that it really isn't as good of a revenue stream as you thought. So on to our third number. So our third number is your general and administrative expenses. So this one here, lump everything in here that is indirect. So things that you're going to spend on in your business, whether or not you make a sale in that time period or not. So things such as rent, utilities, telephone, your CRM subscription, your other online software subscriptions. It could be travel, continuing education, meals and entertainment. So everything that goes into the general and administrative is going to be indirect costs. So things that do not directly relate to making a sale. All right, so the fourth category, fourth number that you need to know is your total marketing. So we recommend to our clients that this is any expense that is related to generating a lead in your business. So that should make it super easy for you to know what you would categorize in that bucket. We call them buckets, so make it easy for to explain it. So when you're putting your marketing expenses in there, that is going to be, if you have a marketing team, that labor would go in that category. If you're doing Facebook ads or any other paid advertising, that would go in that category. In addition, if you are, you have a copywriter, or you have, what else would be in that category? If your cost to sell things online, anything that is going to bring you in a new lead into your business is considered a marketing expense. And so one other way to look at it too is we say it's easy to tell what a marketing expense is, and it's easy to tell what a cost of goods sold or cost of revenue expense is. And so everything else just falls into the general and administrative bucket. Okay, so the last category, the most important number you need to know, is your profit. And if you've set up your systems correctly, then what you're doing is you're starting with this number first. And you know that this is a set percentage of what your total sales are up at the very top, your revenue. And so you can also identify what percentage should be your budget for your cost of goods sold, what percentage should be for your marketing, and what percentage should be for your general and administrative expenses. This bucket here is really important because in your profit, you're also going to be setting money aside for paying taxes. So if you're going to do estimated payments, that would come out of this. If you're putting money aside in a separate account to make a payment at the end of the year, that would come in out of this number. You're also paying down debt. That's going to come out of this number here. If you're reinvesting in the business and creating a new product line or a new service, that's going to come out of here, so it doesn't affect your operating cash flow. So the profit bucket is really important for you to know what it is up front, to have put money, like everything needs to be, we use percentages. So if your total sales is the 100%, then you're allocating, 40 to 50% into your cost of goods sold. You're allocating 10 to 20 to 30, depending on your business, in your general and administrative bucket. Your marketing gets 10 to 15%, and your profit should be at least 20 or above. So that's kind of how we look at the profit and loss statement. And if you set up your chart of accounts in this way so that you just get those 5 numbers when you collapse all of your sub accounts, then that's a really easy way to tell as a business owner how things are faring in your business, how you are compared budget versus actual. So if you'd like some help setting that up, reach out to us. We'd be happy to show you what that looks like and show you how easy it can be to look at your P&L, pull the information that you need at your fingertips, and be able to actually make decisions on spending, on hiring team, on all of those really important things that you need to use your P&L for. So reach out, put a comment below if you want us to get in touch with you, or you can always reach out at hello@the Cash Flow CFO. And we look forward to showing you how to do this, implementing it in your business in a really simple, easy way. All right, thank you guys. I hope you have a great Monday and rest of the week.